Hi, and welcome to the 2020 Economic Depression and Preparation channel. I'm your host, Tony. Thank you for joining me on this weekend edition, October 25th, 2020. Well, today, ladies and gentlemen, we have gotten into more disappointing news, and we continue to see a mixed basket in this economy. On the positive side, according to CNBC.com, September existing home sales jumped 9.4%. But prices are rising too fast as supply remains tight. The median price of an existing home sold in September was $311,800, a 14% gain compared with 2019. The inventory of homes for sale fell 19.2% annually to just 1.47 million homes for sale at the end of September. At the current sales pace, that represents a 2.7-month supply. This is the lowest since realtors began tracking this metric back in 1982. Sales would be more robust if there were more homes available, says the retail sales associate. Well, I do not know if that's the case. They're saying that Americans are splurging on spending for housing in certain markets, but the house prices are rising super fast. Prices are also driven by low mortgage rates, which has been low for the last couple years, which give buyers more purchasing power. Interestingly, vacation and resort home sales were up 34% annually as more people move wherever they want in the work and school from home culture of this pandemic. Regionally, existing home sales in the Northeast jumped 16.2%, recording an average annual rate of $860,000, an increase of 22%. The median price in the Northeast was $354,600, and up from 17% from September 2019. Sales rose 7.1% in the Midwest to the annual rate of up 19.8% from a year ago. The median highest price in the Midwest is $243,100. Sales in the South were up 8.5%, and the median price in the South was $266,900, a 13% increase from a year ago. Out West, the number rose to 18% increase from a year ago, as the median price from the West was $470,800. Sales of newly built homes in August and September were 43% higher annually, but the supply of those homes was also unusually low. Builders are having trouble keeping up with demand. They're also raising prices to keep pace with cost increases for land, labor, and materials. This is according to the report. Now, according to the National Association of Realtors. Now, I want to dissect this really quickly for you here. And it is true in certain markets that the price for cost of materials and land and labor is going up. We saw the lumber price increase that they've been talking about since August, okay? And, of course, land, labor, and materials are going up. And so developers are passing those costs on to consumers in terms of higher house prices. But what is not true is that the supply is low. The supply is being kept artificially low of houses, especially new single-family houses, because most people know, most businessmen know, developers know that the housing crash is coming next summer. And so they want to keep the prices back, or they're not listing those houses so that they can make a killing. They can delist a lot of houses that would be available, so that the investment corporations, the investment companies that come and buy these houses in blocks, in several blocks at a time, they have the money when it crashes. That's what they want to do. So a lot of these houses are being delisted by the banks. A lot of these foreclosures are not showing up interestedly, and so they're keeping the supply artificially low to make it appear as if there's a huge demand for these houses when there really is not. Because, as a matter of fact, look, CNBC just reported on October 21st, Wednesday this week, mortgage demand from home buyers falls for the fourth straight week, and I quote, purchase demand is down nearly 7% compared with 4 weeks ago. The average contract for a 30-year fixed rate mortgages increased from 3.02% from 3%. The rate was a full percentage point yield higher than a year ago. There's a slight pullback in home buyer demand. Applications to purchase a home fell 2% for the week, the fourth straight week of declines. Purchase demand is down nearly 7% compared to 4 weeks ago. Volume is still higher, 6% higher than a year ago. Now, One other good thing I want to tell you about for this economy, as far as in terms of the collapse, is that we do have some seasonal hiring going on. A lot of the grocery stores, a lot of Lowe's and Home Depot, UPS, FedEx, Amazon, they're doing a lot of seasonal hiring, quote unquote, through the holidays, and that's a good thing. So we can thank God that has helped out a lot of people to able to get jobs. If you get on a part-time or seasonal basis, it's better than nothing. So that is one bright spot in this economy, ladies and gentlemen. But in the overall grand scheme of things, we're heading toward a digital cashless society. We're heading toward a slow recovery that's going to take 10 to 15 years, if at all, because we're going from first world country to second world country status or third world country status, because China is a new superpower, and they're no longer going to tolerate the United States bullying their countries with sanctions and all this other stuff. When they produce everything and they manufacture everything, and they have more people than us, and they have more technology than us now. Notwithstanding the military technology, but they have more general technology than us, and we're going to see that play out after the elections and into next year. So even though the GDP has remained stagnant, the gross domestic product, and they're trying to make it look like we're growing in terms of the stock market, Main Street is shrinking tremendously. And you can see that in most of these cities, towns, states, and counties in your area. So the media is painting the picture that the economy, has regained 3 million to 4 million jobs during the third quarter after losing a lot of jobs, but we don't see that translated to it. We're seeing a lot of commercial vacancies in these cities. We're seeing a lot of homeowner vacancies. We're seeing rent prices fall in some of these cities, big cities like San Francisco, New York. A lot of people are leaving New York City and moving out into the burbs, Westchester County, even further upstate. A lot of people are leaving the cities and moving. A lot of people are going to being more self-sustainable in terms of farming, gardening, getting their own electricity, their own water source. And that's going to be the future, folks. The future is going to be we're going to have to be dependent upon ourselves, because the government is going to become insolvent, basically. And that's why the stimulus is not going through. If you're waiting on the stimulus this year, you might as well forget about it. We're going into November almost, and you're not going to see it after the election. So it's going to be next year sometime, probably February. And by the time, it's not going to make a big difference after you spent, your holiday money and spent with family and all of that. It's not going to make a big difference in your life, $1,200. Now, maybe $10,000 or $20,000 stimulus, maybe that would make a little bit of a difference in your life. But $1,200 is not going to make a big difference for the middle class or for the poor class or for the, those who are on the fence or just coming to this country. So this is what we have to look forward to. We're looking forward to an economy that's overspent, overbought, and no production is going on. And so despite what you hear, this is what we need to be preparing for as best we can. I know a lot of us don't have extra money during the month to buy all these things, supplies like food, water, medicine, but just try to get, a couple cans at a time from the Dollar General store or from any store, Dollar Tree. Try to get blue tarps, things that you may need to repair, make your own repairs in case FEMA doesn't come, or in case the electricity goes out, if we go through a natural disaster or some kind of EMP attack or some kind of nuclear attack. You got to be prepared, because these things are all possible. Everything is on the table now, as the United States is weakening every day. It's going on a decline, even though the media and everybody else is painting it as being this great thing country. Our cities are going to be in decline. The infrastructure is going to be in decline, because we never got an infrastructure bill passed. Remember all the talk about the wall and building and rebuilding America's roads and bridges? That never happened. Trains, high-speed trains that never got passed through Congress, through the Senate. It's because we're broke. And so if we can't get a $4 billion wall passed, if we can't get infrastructure in this country fixed, it's going to go downhill. So regardless of whether you're Republican, Democrat, Independent, liberal, whatever, the infrastructure in the United States is aging. These cities, counties, and states are broke. They're going to try to raise taxes, but it's not going to be enough to fix these roads, bridges, skyscrapers, you name it, trains, planes. And so we're going to go second world status, and this is what we're going to go to, So, and also a digital society with some kind of socialist, hybrid socialist government, basically, is what they're going to raise as fascism, but they're going to call it some type of socialist, hybrid, one united, we're all in this together type of world government thing. Because you notice that all of the other countries are doing the same thing. Europe is printing up a bunch of money they don't have. Everybody except China, and in the exception of China and Russia, is not doing this, because they have already had their hard times. Their people have already been through depression. level living for the last 40 years. And United States and Europe have been living high off the hog on the credit card and on this U.S. currency being the reserve currency, which is about to end too. So, get ready for the reset. This financial reset is coming. Try to live small. Try to get out of the bigger cities if you can. If you can't, then just get ready for urban living and prepare as best you can. So that's today's Weekends Report. Please be blessed, everyone. If you have any questions or comments, please leave them down below. If you have any suggestions for future videos, leave them down below too as well. And please subscribe to this channel. Thank you for your support, and I'll talk to you very soon. Bye-bye.